Welcome to Safe Money Retirement Radio with your host, Tim Wood. Tim is a retirement and income specialist, certified financial fiduciary, and founder of SafeMoneyRetirement.com, primarily serving Western North Carolina, East Tennessee, and Southwest Virginia. But he's sought after nationally for his expertise in helping people secure their retirements. Mr. Wood is a licensed life insurance professional in multiple states and specializes in working with people who are near retirement and those who are already retired with wealth management, income planning, and asset protection strategies. And now, here to talk with you about securing your retirement, your host, Tim Wood.
Thank you for joining me this week. I'm Tim Wood, host of Safe Money Retirement Radio. I specialize in asset and retirement protection and income planning. I think all my listeners would agree that life has risks. In the Lord of the Rings saga, Bilbo Baggins said it best when he said to Frodo, "It's a dangerous business going out the door. You step onto the road, and if you don't keep your feet, there's no knowing where you might be swept off to." There is nothing in life that is 100% guaranteed on this earth, not our safety, relationships, property, and especially not our investments. Even financial products with contractual guarantees like fixed annuities or FDIC-insured bank accounts are not 100% guaranteed. The very air we breathe is not guaranteed, so how can anything on this earth come with an absolute guarantee? Something that has guarantees always has to be backed up by something else, and if that fails, the guarantees are gone. Although arguably the safest storage of wealth globally, even our currency, the U.S. dollar, must still be backed up by the U.S. government. So what do we do to protect our life, our property, and our retirement from risk, even if that risk is minimal? According to the National Fire Protection Association, there is about a 0.03 chance of having a house fire. What do you do despite having such a slight chance of your house catching on fire? Do you ignore the risk? Of course not. Even if your home is paid for, don't you still buy fire insurance that will repair or replace the house if it catches on fire? Of course you do, absolutely. You start by choosing an insurance company with a history and financial strength to back up its guarantee of covering damage from fire to your home. Based on reports from various mortality tables, a 60-year-old male has less than a 1% chance of death this year. Although nobody likes to think of dying, and even though 1% chance is more than most of us would feel comfortable with, it's still a minimal chance. Yet, what do we do if we have a loved one or business partner who will suffer financial consequences from our death? I don't even have to tell you because it's Financial Planning 101. You buy life insurance. If you don't have life insurance and have people who will be negatively impacted by your passing away, I bet you wish you had life insurance. Part of what I do for my clients is to review their existing life insurance policies to help them, and especially their beneficiaries, understand the products they bought and their benefits. Some benefits can be used while you're alive, so comprehensively reviewing your policies is very important. If you would like a complimentary review of your annuities, life insurance, or long-term care policies, give me a call at 844-905-SAFE. That's 844-905-7233. We will make sure your insurance is up to date with designated beneficiaries and let you know exactly what you've paid for. If your coverage is not adequate, we can discuss that also. If you're not medically qualified for additional life insurance or it's too expensive, we can go over some enhanced death benefit options without medical underwriting. In other words, we can increase the amount of money that goes to your loved ones, and you cannot be denied for medical reasons. Once again, my number is 844-905-SAFE. That's 844-905-7233. Getting back to risks in life and Bilbo Baggins warning us of going out the door and stepping onto the road, the U.S. Department of Transportation says there's about a 3% chance of being in a car accident in any given year. But once again, what do? We buy insurance for property and injuries if we're in an accident. This all seems so obvious, and it is. We buy home insurance to protect our home, life insurance for our beneficiaries, and auto insurance for our cars and the liabilities in an auto accident. Almost everyone knows this and doesn't think twice about covering these risks. If this is common sense, why don't people insure against one of the most significant risks we face to what is typically our largest asset, our retirement funds? The Stock Traders Almanac analyzed that there is roughly a 26% chance of experiencing a market loss in any given year. That 1 in 4 chance is an estimation based on 13 market downturns over a prior 50-year period. Now, you could also argue that the longer it has been since the last market crash, the closer we get to the next one. When the market is up, we all know that you can only capture your gains by pulling money out of your account, which turns paper gains into actual profits. What if you're retired or approaching retirement and the market drops? You have no choice but to capture losses if you access your money. What if you have to take your required minimum distributions and liquidate funds to pay for taxes? Once again, you have no choice but to turn your paper losses into actual losses. Do you want your paper gains to turn into paper losses and real losses? It's time to consider some real protection. Maybe you should look at a fixed indexed annuity that credits interest based upon an external index. During an indexing term, if the external index doesn't perform well, no interest may be credited, but no loss occurs either. Give me a call now at 844-905-SAFE. Once we talk, I can determine if we should meet. When you call, make sure you ask for our Safe Money Retirement Book and Information Kit, which we'll provide at our expense. My number again is 844-905-7233. You've worked your entire life building up your retirement funds in hopes of living comfortably and without the stress of coming up short due to a market crash. Isn't it time to at least protect some of your retirement money from the high probability of market risk? I hope you've enjoyed Safe Money Retirement Radio this week. Unfortunately, we're out of time today. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to Safe Money Retirement Radio with your host, Tim Wood. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Tim Wood now for your complimentary Safe Money Retirement Book and Information Kit at 844-905-SAFE. That's 844-905-7233. Or contact him online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Surrender charges applied to base annuity contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or a death benefit unless specified in the annuity contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Listeners should be aware of IRS penalties for withdrawing funds from an annuity before age 59 and a half. Fees may apply. Annuity guarantees are based on the insurance company's financial strength and claims-paying ability. No information presented today should be acted upon without meeting with a qualified licensed professional. Obviously, by calling us now, you are taking just the first step towards protecting your retirement. It is important that you read all insurance insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice. The market goes up and the market goes down. It always has and it always will. But if you are in or near retirement, do you have time to wait for the market to go through these cycles? Think about it. Having your money invested in the market is like walking next to the edge of a cliff. What if you lose your step? What if the edge gives way? What if a strong wind blows you over the side? It's good to stay away from the edge of disaster in life. And when it comes to being exposed to financial risk, it's no different. Shouldn't you at least try to protect the money you depend on for your retirement income? Call now for a complimentary copy of the Safe Money Retirement Book. Our number is 844-905-SAFE. That's 844-905-7233.